Hey, welcome back to another episode of Johnscryptotherapy. Today we're going to look at the Omi token on the daily chart. Really excited to show you guys why I'm looking a little bit bearish. But before we take that sell, we need the right setup. So guys, we do have a weak low. The reasons why it's already invalidated, the orders already got filled. So because the orders already got filled, we are going to use this strategy to sell the market, but there has to be a right criteria. So what I'm looking for right here is two things, guys. And I'm going to explain this to you. So if you can take some notes and try to write this down, this will be really beneficial. And if you guys do want to sell your Omi tokens, these might be some key levels. Remember, it's not financial advice, it's just my advice and how I look at the charts and provide towards my student. So let's get right into this. So what we can see right here, there's two things that can happen, and I'm going to explain this to you guys. Price can actually reject and go towards the top side. So number one rule is this: the body has to close below this structure. So keep that in mind. Write this down in your notes, guys. The body must close below this structure. So let me put this in a different color, like a purple, so you guys can see. So the body must close below the 0.00071 level. And if the body does close slightly towards the upside, this is invalidated and we don't have a strong sell. Price, the body has to close below, and I don't care how far the wick goes up. If the wick goes as far as the one, that is totally fine. The other rule is for the wick, it cannot pass the top of the previous structural wick. So it cannot go higher than the previous wick. So it can fall just like this. I don't care if it goes higher than this wick, but remember, it cannot break above that structure. So we can still have that idea as a selling pressure towards the downside. So once again, guys, the body cannot close above the structure and the wick cannot close above this structure around 0.00076-ish levels. Okay. So that is the second rule. The third rule is this: if prices don't come up all the way towards the upside, we could see a reversal right here. So this level right here, and I'm going to explain this to you guys. So around 0.00065-ish, if prices come up towards that level, and let's say we get a level like right here, just go slightly towards that level, as long as the body or the wick, even if it touches like this, it's totally fine. The prices do touch just like this, guys, and it doesn't enter the zone of this level that I drew out. And as long as the wick touches it, and it's also, and when it does print this color, you can technically look to sell, even if prices don't break up towards the upside with the body close. Even if the body doesn't close, it is fine, guys. As long as the wick goes inside this range to liquidate orders, once again, that's the key word. Once it liquidates this orders and grabs the orders, then we're expecting price to go a little bit lower. Where are we expecting price to go towards? Guys, look left of structure. This is where we take some profits on the way. So we're expecting price to go up towards this level. If we do get a candle like this, it is totally fine. You can still take a sell. We could take our first take profit there, second take profit right in the middle, and the third take profit is going to be right away all the way towards the bottom of the final move. That is what we're looking for. The better trade, of course, guys. And if it goes towards the upside, we have a better trade. Why? Because we have a bigger range. That is the key word for today, guys. We have a better range. So if we do see this confirmation, we take this trade. Stops always go above the strong high. We take our profits towards the downside. You guys can take profits just on the way towards the downside. So I'm going to repeat this again. Try to follow along. And if you guys do like this advice, please make sure to like, share, and subscribe. This is a powerhouse trade that I'm looking for. I am bearish in this case scenario, and we're going to take this strategy to the next level. So once again, guys, if prices break towards this upside with the wick, I am fine. It is fine. But if the wick breaks above the structure, invalidated. All right. So it's invalidated. You don't want to take this trade. If the body closes above the structure, invalidated. So what it must do, the body must close below the structure, and it must be a wick that does not close above the structure. So if that happens, you can absolutely take the trade, and we're looking to sell. Take your profits on the way first, second, and third towards the downside because we have a weak low. So regardless of what I'm trying to show you, the anticipation is this, guys. Price is trying to go towards the downside, but we don't want to take the trade right away. We want to wait for the right retracement, the right levels before we take the trade. If the bottom level, if prices go towards the upside and we don't have a wick, we cannot take that trade. We need to make sure a wick goes inside that level to confirm to us that price is trying to go towards the downside. That is the key right here. The other thing I want to mention this, just so you guys don't get confused. If we do see a bullish candle, let me put this out for you guys right here. If we see a bullish candle, price is going towards the upside. Let me put the same color. If we see a bullish candle and then we see another bullish candle right here. Okay. If we see this bullish candle right here, and then this candle was over here, you can absolutely take the trade right here. Because why? We're getting liquidated. The stops have to go above the strong high, and we take that sell towards the downside. We could look for our first take profit roughly around 0.00064-ish, guys. So that could be a level we could take some profits roughly around this level right here, okay? So that is the idea that we're doing. So once again, we are bearish. We want to make sure the tops hold of the structure, no body close. If a wick closes, we're still fine. If the body does close slightly before, and this is the bearish candle, once again, if this is the bearish candle and we do see a wick, that is the wick getting liquidated. That means, guess what? We enter the trade right here. Our stops has to go to the top of the structure, or it could go a little bit lower if you really wanted to. It's up to you how diverse you are with your risk to reward and your risk tolerant. But the idea, guys, it's bearish. Now keep this in mind. The full take profit is roughly going to be around this. Once we hit our first and second take profit, we reduce the risk and let the trades run, okay? The idea is it could continue down a little bit more before it finds another key level before prices reverse. So this is my idea. This is the perfect setup. I'm looking for this perfect setup, guys. If you do get into the setup, please make sure to take advantage of this. A beautiful sell, and I'm looking to buy at the bottom. If you guys do like this video, please make sure to smash the like button. Thank you so much for watching. Take it easy, and John out. Peace!